What's up, everybody? Thank you so much for tuning back to the channel. So you're going to be in for a treat today. I'm going to be going over the price direction of the SPY, basically the total stock market. I'm going to also be kind of going over some of the things that have transpired in the news over the past few weeks, in addition to some of the things to look out for if you are day trading or swing trading this, and how you can best take advantage of the current price action. So let's just jump into this. So from a SPY standpoint, if you take a look, the stock market has just ran up a ridiculous amount back from the 2020 lows. It has gone up over 45% as a result of the federal stimulus money. And this is, right now, this is a very weird time to be in the stock market from a day trading and even investing standpoint, because there's so much uncertainty and there's a lot of fake outs and there's a lot of tricks that market makers and institutions are doing because there's such a brand new influx of retail traders. I've been trading for quite a while now, and I'm seeing some things from a price action standpoint that I haven't actually seen in quite a while. One of those being a lot of pre-market and post-market price action, basically showing the stocks are going to go up, and then they just flat out dump. So this is a really weird time to day trade if you're not properly managing your risk, and if you're not making sure that you're doing the following the 7 day trading steps that I have mentioned in my previous video that I will link in this video. If you haven't watched it, it's a gold mine, so I highly suggest you guys do it. So I digress. So back to this. If you just take a look at the market right now, we're in a very weird time. It's rebounded a significant amount. Right now, as of a few days ago, it finally pulled back off of an overbought resistance in June 8th, and it's gone down. It has tested the 300 support level, which I knew that it was going to do because it was a major support. It dumped, flat out tested it. The next day, it bounced up immediately, which I expected. Came back down, tested it again, bounced up. So totally be expected. And now here we are. We're kind of like this no man's land, right? So some people believe that we're going to come down and test this 296 support level, and then we're going to bounce up, or the 300 is going to stay and we're going to continue up, or some people think it's going to have a little bounce and then it's going to roll over. So I am short biased right now, and I'll tell you why. Since the lows and the 218.26, right? Since we've had the pullback from the virus still, it's gone up over 45%. We had a little consolidation, but it's gone up a ridiculous amount, and it's really only pulled back like 7%. It's like a ridiculously small amount. And well, I guess if you count that, yeah, it's about 7%. And so I think that that's just not enough pullback, even if we're going to do a continuation. Now, the federal chairman, he came out for the Federal Reserve. He came out last week and he basically stated that they're going to keep, Powell, that they're going to keep the interest rates to basically 0.25 points. And this is when the stock market just flat out dumped. And the reason being is that that's an indication that the Federal Reserve basically believes, and they stated clearly, that they don't believe that the economy is going to have a fast recovery. Duh. I mean, we got 40 million people off of work. Duh. I mean, that's literally as many people that are in the Great Depression, which doesn't make any sense. This is a really weird time, I think, to be in the markets because there's just so many conflicting indicators. So, back when we had this, back when we were at the high, back in February 19th, and then we crapped out, I don't think anyone could have predicted that we were going to have such an aggressive run-up, even if you've been trading for years. And the reason I say that is because if you go back to, actually, let me go back to the monthly. If you go back to the last time we had a definitive recession in 2008 because of the global market crisis and the real estate market crisis, you go back here, our highs were in October 31 in 2007. We didn't hit our lows until 2009. I mean, we had a 14 month period with no pullback really before we actually got to our lows. It took like 14 months, a year and 2 months. It took 2 months this period. That just doesn't make any sense. Like, this is not a recession. So, I want to get, if you take a look here, our last recession was literally, right, about 11 years ago. Actually, no, more than 11 years ago, because it's February, now here we are in June. So we're talking 11 years. A typical bull market lasts about 8 to 10 years. We're in our 11th, right? So we have an unemployment that is 40 million people. We have people that are still being laid off. We have the government that is literally handing out money to regular citizens. And when has the government ever handed out money, right? I mean, their job is to take money through taxes and then tax you again and again and again. So you know that they know stuff's crazy. We have the airline companies that have lost 90% of their revenue. And, and here we are, and we're like, we were off 10% all-time highs. Like, something just doesn't quite feel right. And so the Federal Reserve Chairman coming out last week stating that, he's going to keep interest rates low because he doesn't see that the economy is going to recover in a aggressive, in a fast period. It's kind of a no-brainer. So this tells me there's no possible way that this can be the high and that we're going to continue further. It just isn't going to happen. So I do want to give a disclaimer to a lot of you guys who are new to investing. If you're new to day trading, swing trading, just investing in general. I have seen a lot of price action with market makers and with stocks lately that I've never seen before. As a matter of fact, even Jim Cramer came out on CNBC last week and stated that he is seeing that market makers are actually aggressively manipulating stocks that are even going bankrupt to get retail to jump into it so that they then can dump it. Let me give you guys a couple of examples of what I mean by that. So here we go, Hertz, right? So we know Hertz has filed bankruptcy. Hertz has basically said, hey, we don't have no more money. We can't survive this global crisis. Stuff is bad. And look what happens to this. So they go from $20 down to $1, down actually below that. And then there's this ridiculously huge spike to where it goes from $1, a little bit more, a little bit around that range, up to $5.50, 100%, right? So if you're retail, Jim Cramer said that they intentionally spiked this. They released a news article, MSNBC, talking about how Hertz is going to restructure, yada yada yada, to get everybody to jump in. Oh my God, I'm going to get this good deal from 2085. Look how low it is, and then they'll say nope, psych, and then they dumped it. I want to show you guys also American Airlines. I think it's AL actually, if I'm not mistaken. Yeah, AL. There we go. Another one thing here, right? So they released a news article, MSNBC, CNN, whatever. Those news articles stating that airlines say that their capacity is picking up. It's doubled over the last month, and then the stock spikes. It goes from $13, $12.80 up to $20. People, oh my God, like I was watching this, and it just blew through every single resistance. There was no pullback. There was no consolidation. With very little consolidation, and I was like, this is weird. Like this just isn't normal, right? People were stepping over each other to get in the stock. And then, what did they do? They got you here, they trapped you, and then they just dumped it. And then here you are holding the bag. You're down 30, 40, 50%, and I think it's going to probably go lower. There's a lot of price action, so you guys need to be very careful if you are trading to make sure that you're managing your position size, because if you aren't, you're going to get killed in the markets. To be fair, to be a disclaimer, because I can't lie to you guys, this is a channel that's built on honesty and trust, and so, I certainly don't want to tell you something. I'm never going to tell you anything that I'm not following, that I don't firmly believe myself, and so I have to give you guys a disclaimer to give you a heads up to let you know that I actually lost some money in the markets last week. I actually got caught in the Boeing. Pop here, right? So I know that Boeing is not strictly an airline company, although they make planes for airlines, and they obviously have like 41% of the revenue goes towards military contracts. But you take a look here, it trades like an airline company, and so it went from 151 all the way up to the 227, and I kind of got a little cocky and arrogant. I actually had bought all the way up here, although it was clearly short oversold. That's just sometimes, even the best traders can get a little ahead of themselves. And I did that because I was expecting to see a test of the 200 MA, just basically a magnet test, and then to see it pull back. But in hindsight, there was clearly an oversold indicator. There was also the gap that I thought that it was going to fill as well. But there were a number of things to not enter in this trade so high up, at least not in a significant position size. And if you take a look here, they took this to this price range, and then what really made this difficult is that even after hours on this day, they ran it up after hours. So they showed the result that there was going to be additional volume that was after hours, that it was going to pop the next morning, and I said, okay, that's when I'm going to get out, and that's not what happened. So it ran up after hours like 3%. I said, what the hell, I went in a little position there to try to catch a nice little pop, and then it just literally flat out just dumped, and then it dumped, and then it dumped. And then I had a little dead bounce here. So these are the things you guys need to be on the lookout for. Now, back to the SPY. Okay, so back to the SPY. Where do I think we're going with this? Well, again, so we've had this ridiculously huge run up, over 45% off the lows, and it got to the oversold level. It's bounced back. It bounced off the 300 support level, which is a clear support level, which I expected. And then normally when you have clear support levels like this, it'll bounce multiple times, which it did. So it hit this, it bounced up in the morning, it could get out, it came back down, it retested 300, it bounced up off it again. And so now people are wondering, okay, is this the beginning of the end to where we're going to now go back and do like at least a retest of the lows, or is this just like a little breather and we're going to continue up? Well, you have to follow the big money and you have to follow the overall macroeconomics of the economy. And so right now, when the Fed Chairman Powell comes out last week and says that they're keeping interest rates at a quarter of a percent because they believe that, 0 to 0.025, to where they believe that the economy is not going to recover aggressively and that it's going to be a sustained recovery for a year to 2 years, then there's no possible way that the stock market is not going to pull back, right? It just isn't. I mean, I think everyone and their mother and their dog knows that if it wasn't for the government interjecting into the economy here, we would probably be somewhere in the 150s right now, or 140s, even lower than that. So, this is not going to end well if you're bullish, at least in the short term. If you're an investor, then, like anything else, dollar cost averaging is always the best way to go. If we go back and we take a look at Apple, right? Take a look at Apple. That is not, there we go. Boom, wrong Apple. There we go. Right? I mean, Apple has gone from 212 to 357. Is it not ready for a pullback? I think it's ready for a pullback. And then not only that, but, keep in mind, Apple trades almost like, it mirrors the SPY. I mean, it's a $1.5 trillion company at this point, the largest market cap. And so, as the SPY goes, as Apple goes, the SPY goes. And looking at Apple, I mean, it's very, very clear it is more than due for a pullback. It's gone up over 50% or just about that in literally 2 months. So well due for a pullback. And if you take a look here, the first support level was 323. It's at 338. It's going to pull back. It just is. The real question is, once it retests 323, is this a good time to go ahead and say, okay, it's time to get out? Well, here's a couple of things, all right? If you are long biased, whether you are day trading or whether you are swing trading or whether you're investing, and you say, hey, you know what, I want to get in some Apple, or I even want to get in to some additional stocks, this is the time to enter in a position size right off at this level. Not here because there's no real significant support here. The first level of support, and it's huge, is here, 325.17 in this range. So if you are looking to enter in a position, and even if you're just looking to scalp, this is where you're going to buy, right? 327.02. And that kind of goes along the lines for anything, right? I mean, because keep in mind, the stock market trades, they all trade together. So that is going to probably coincide with the 292 support range, 295 for the SPY, right? You're going to notice that when the stock market pulls back to 295-ish, 294, and I guarantee you it's going to pull back in the next few days and touch this, you're going to probably see Apple back to those. You're going to see Apple around that time. If I can get the right Apple here, you're going to see Apple probably around that price level. So if you are long biased, you want to buy there. And if you're short biased, I personally would not short anything right now until I see a 50%. Now, again, I'm talking about from like a long-term shorting standpoint, until I see a 50% retracement, until I see a break of this retracement period. So, people are wondering, okay, is this the beginning of the end right now? And I think that we're not going to see that until we begin to see this break. So we are going to see a retest of this. That's a given. After we see a retest of this, we're going to also then probably see a retest of the resistance of 300 range where it's currently at now. And then if this doesn't hold and it comes back down to retest the support level again, right? And if it's going to come back down, then it's going to test the 50%, 277.89. And then if this doesn't hold, that's when we're going to see a reversal of the trend, and then we can probably expect to go all the way back down here. So overall, again, I am definitely short biased. I do not think that we have seen the lows yet. I expect some type of news to come out with either the second wave of virus, heaven forbid, or them coming out state, just whatever news article they want to run. The state's unemployment is even higher now, or whatever whatever it is, they're going to come out with some type of news. It's going to crap the markets. It's going to catch people off guard. And then I think we're going to at least see the lows. Now, from an investing standpoint, I don't think that we could get a sweeter spot than down here again. I think everyone is waiting to get down to 218, 26, 218, 28 range. If we get anywhere near this range, I am going to go in very heavy from an investing standpoint. And the reason I'm going to do that is because that's a very, very clear indicator of there being a double bottom, right? So whether the stock market goes up and hits that double bottom, or whether it, well, it's going to, if it hits the double bottom, it's going to bounce up at least for a little small bounce, and then if it falls back down and then hits another low, that's still an excellent place to buy in from either a trading or an investing standpoint. And so I'm going to go in very, very heavy there for the anticipation of catching a double bottom, or for averaging down and saying, okay, well, I hit the double bottom, and then anything additional below that, I'm just going to go ahead and continue to go in until I max out, and probably only be like 10% cash. And that's pretty much it. So, again, for the short term, we're at the 300 support level. It's hit it. It bounced up like I anticipated. It come back down and retest. It's bounced up off of it again. I'm guessing that tomorrow we're going to probably see a green day. And I only say that just because the stock market likes to do a lot of wiggles, and it likes to do a lot of shaking out before it actually chooses a direction. So people are seeing red. They're seeing red again. There has to be a bounce up to test a resistance level, and then I think we're going to come back down and test 300 probably in the next day or two is my guess. So if right now I am short biased, I think it's going to definitely test this support level here. If you're looking to go in long off the SPY or off of Apple or any other, major stock, I would go long, at least from a short-term perspective, once it comes down and tests this 292.05. This is where you're going to see a bounce. Okay, and then from here, you got the next support level, which is at the 277.89. We're definitely going to see a bounce from here, probably up here to the resistance. And then if this breaks, and once it comes back down and retests to 50%, that's when we're definitively back into a downtrend. And then at that point, I don't expect this to hold. I think we're going to go back and see the lows. So I hope this has been very beneficial. Hopefully you guys don't blow up and smash your account, but I do hope that you blow up and smash the like button. If you have found this review and this technical analysis very beneficial, I highly recommend that you guys subscribe to the channel. If you guys are not aware, this is a stock trading, stock investing, financial education channel. I make sure that I try to stay up to date on the latest financial news, and that I try to give you guys the most unbiased and clear and honest opinion and approach to all of the research that I do in the stock market, and also just to the overall economy. So thank you guys so much for tuning in. And yeah, if you have any questions, comments below, make sure that you leave your comments in the comment section. Make sure you hit the subscribe notification button. And I also want to hear from you all as well. Do you think that we are going to now enter into a new bear market, or do you guys think that this is just a little bounce and we're going to continue to go higher? So thanks for tuning in, and I'll talk to you later. Take care.